Cars, they're more than just a mode of transportation in India. They are a symbol of status, freedom, and for many, a significant investment. But did you know the taxes on cars in India can cost you just as much as the car itself? It all started on July 1st, 2017, when India introduced GST, a bold attempt to simplify the country's complex tax system. But instead of simplifying, it unleashed a series of new tax rules that directly affected the price of cars. Before GST, the car industry in India was a jungle of taxes, excise duty, VAT, infrastructure cess, and more. These taxes were confusing and expensive. For example, a 12 lakhs rupee car could carry a 42% tax load, making its final cost almost 17 lakh rupees. When GST was introduced, it aimed to replace these taxes. The idea was simple: one tax, one nation. But things didn't go as smoothly as expected. Cars, considered luxury items, were slapped with a hefty 28% GST. But wait, it gets more complicated. To compensate for the tax shortfall, the government introduced a cess, an additional surcharge on cars. And here's where things get crazy. Cars could now be taxed up to 50% when GST and cess are combined. Let's say you're eyeing a Toyota SUV. The ex-showroom price is 33.4 lakh rupees. Of this, 9.94 lakh rupees is GST and 7.4 lakh rupees is cess. Yes, you're paying nearly 18 lakh rupees in taxes alone. But not all cars are hit equally. Smaller cars like those from Hyundai benefit from lower taxes because they're under 4 meters long. So a 1% cess on smaller cars makes a big difference in their final cost. And don't forget road tax, which is applied on top of the GST and cess. For a 20 lakh rupee SUV, you could pay an additional 20% road tax. That means the total tax burden could push the cost even higher. Now here's the kicker: many car parts are imported, and the government slaps an import duty on them too. That's separate from GST, cess, and road tax. For luxury cars, import duties can go up to 100%, making them astronomically expensive. For a car like the Hyundai Creta, which costs 16 lakh rupees, you're paying over 8.6 lakh rupees in taxes. That's almost as much as the car itself. And if you're in the 30% income tax bracket, you'll need to earn 22.8 lakh rupees just to afford it. And if you're taking a loan to buy the car, well, brace yourself. The interest you pay on that loan is another cost burden. And you're essentially paying more money to the government in taxes than to the car manufacturer. And the tax system doesn't end when you buy the car. Car maintenance, insurance, and fuel are also taxed, often at an 18% GST rate. And did you know that on every 1 rupee of petrol, 10 rupees goes to the government? Petrol companies get just 40 rupees. What if taxes were lower? Maybe we could afford safer cars. Because right now, many cars in the 10 to 15 lakh rupee range in India are far below international safety standards. But that's a story for another time. Don't forget to like, share, and subscribe for more in-depth insights into the world of business.